It's Monday, September 19th, National Talk Like a Pirate Day. Let's take a look at gold. What sparked this chart is someone posted a Bloomberg article about how funds are dumping gold at the fastest pace since May. And that's supposedly bearish. You got commercials are net short, speculators are net long, so it's kind of a bad setup for gold. But let's just dig in a little bit, look at the chart. Here is the gold futures contract continuous. Here is May, when they were supposedly dumping gold at the fastest rates since before that. So it was a correction, and it didn't seem to be very much of anything. So the same thing happening here, and you can see gold is not broken down at all yet. Let's just put a line in there. I'm just eyeballing it here. This is nothing scientific. Adjust it a little bit. So right now gold not really broken down at all, still just moving sideways since July, or actually since late June. And what happened over here, this is the Brexit vote. So it's still above where it was before the Brexit vote. I don't really see any need to panic here. Let's come in a little, go out a little bit more, put another line from the bottom. Again, it's a kind of a critical juncture here, but no breakdown yet. So while perhaps the fundamentals of who owns gold and how fast they're getting out of their positions versus the trading of gold, pure technicals, I don't see the problem just yet. Now what I want to do is move out to longer time frames. This is the weekly chart. Forget the averages; those don't apply right here. Still not so terrible. It hasn't really hit a resistance ceiling, which is about in here. That's north of 1500. So there's no actual significant chart resistance here. If you want to maybe argue that was resistance just under 1400, okay, I'll give you that. But to me, that's a shorter term resistance, not quite as strong. And now let's go out even further. Get rid of that line. And if you look at this chart, and let's put it in log format and get rid of some of these lines. Get rid of that as well. I see a pretty solid bull market, pretty sharp correction here, and then call that a bear market because it lasted a couple of years. But there's a breakout to the upside. And again, forget the averages; those don't apply. The parameters for the daily time frame. So I don't see the big problem here. So we'll come back into the daily, and let's say that the net selling of the funds right now is a bad thing, and this breaks this area here. How far down is it going to go? Of course, everything is just forecasting, but do you see it going back down into the 1000 range, to the 1100 range? I don't. I see possibly a correction. Here's the 200-day average. We're back in the daily time frame, coming up to 1250, just below that now. So maybe in the high mid 1200s might be a corrective dip, which is kind of on par with what happened in May. Here's May. So I'm still pretty bullish on gold. Yes, Fed is going to raise rates, but I think the reason they said is that they see inflationary pressures. And since when is inflation bad for gold? So there you have it, just my view. And let's see what happens with the support and the trend line.